Hey guys, welcome to the Jaden Olmstead Show. I'm Jaden Olmstead and this is my show. Today I'm going to talk about the story and history of how the stock market became the global entity that it is today. This video is going to be broken down into two halves. The first part is going to be the first public stock and the second half is going to be modern exchanges. Before we start, I'd really appreciate it if you guys like the video, so make sure to go invest in the like button to support the channel. If you want a huge head start to investing, make sure to go check out the links in the description below. The Dutch East India Company, aka the first public stock. In 1602 Amsterdam, the first modern stock was created. A business called the Dutch East India Company became the first publicly traded company, allowing investors to buy and trade their ownership of the voyages called stock. This was a spice company that had a monopoly of ships over the East Indies. The word stock actually originated from the Dutch and German word for block of wood, and it often refers to shipbuilding materials, so it is assumed that the word stock meant to own a piece of the ships that would go out and seek profit. These investments were very speculative though, because ships were not guaranteed to even return profitable. Even worse, two ships could arrive at the same time and cause a depression in prices, and this would hurt investors and merchants but benefit customers. This would be similar to how oil went negative in 2020. In order to avoid this, the Dutch East India Company would bribe the crown every 20 years, and it could do this because of the massive size and value of the company. In today's dollars, the Dutch East India Company was once valued up to $7.9 trillion, equaling as much as many of the largest companies today combined. After each voyage, dividends would be paid out to the stockholders from the profits. From 1602 to 1696, the company paid out a dividend that ranged from 12% to 63% annually. The company also issued bonds, funding individual voyages and expanding their fleet. After this company went public, the Amsterdam Stock Exchange was created in 1611. In 1634, Dutch East India ships began carrying tulip bulbs back to Amsterdam. These tulips began to trade at over 6 times the average person's annual salary in Holland, creating a tulip bulb market bubble, or tulip mania as it's often called. This tulip mania caused the price of the stock to spike 1200% and then crash 300% with extreme volatility. Somehow the business survived. Other countries began to have similar public businesses, and investors really liked owning these businesses. Investors would buy IPOs blindly and own stock without even knowing what the business did, and this eventually led to financial instability. In the year 1720, investors became fearful and all tried to sell their stock at once. Nobody was even buying though, and the market crashed. Shortly after, another crash arose from a scandal in England known as the South Sea Bubble. These crashes really concerned investors, but they also gave them experience and accustomed them to trading stock. Eventually, the Dutch East India Company would come to an end. By the year 1800, the business lost its monopoly to competitors and was struggling to survive. Finally, it was formally dissolved. At the peak of its life, the Dutch East India Company had 40 warships, 150 trading vessels, 10,000 professional soldiers, and countless employees. The first publicly traded business had lasted for 198 years. Although Amsterdam created an exchange in 1611, America wouldn't have one until the late 1700s. A small group of merchants created the Buttonwood Tree Agreement, and these men met daily to buy and sell stocks and bonds. This is the origin of today's New York Stock Exchange. These guys invented the largest stock exchange in America, but they weren't the first. The actual first stock exchange in America came about in about 1790 in Philadelphia, and it was called the Philadelphia Stock Exchange. The exchange greatly benefited Philadelphia's economy and place in global trade, and this began the development of U.S. financial sectors across the Western world. In 1817, the Buttonwood traders would watch the Philadelphia Merchants Exchange and study their exchange model to later mimic. Afterward, they created the New York Stock and Exchange Board, and it was a very formal place with an entry fee and dress code. By 1837, the attendance fee was raised from $25 to $100. In 1835, the Great Fire of Manhattan destroyed 700 buildings, and Wall Street had a huge property loss. Luckily, Samuel Morse opened a telegraph office, and this allowed brokerages to communicate without being physically there. In 1903, the doors of the New York Stock Exchange reopened with hundreds of stock certificates being held in underground vaults. The stock market began to surge, and by 1928, it was up an impressive 50% high despite worsening economic conditions. In 1929, the market dropped 11% on what's known as Black Thursday. This drop caused investors to panic, and this led to the crash of the Great Depression. Many factors contributed to this great economic crisis. Since then, the stock market has experienced many crashes, such as the 2008 subprime mortgage crisis. In 1971, another exchange was created called the National Association of Securities Dealers Automated Quotations, or the NASDAQ for short. In 1992, this exchange joined the International Stock Exchange based in London. Together, these two created the first international securities market. The New York Stock Exchange and Philadelphia Stock Exchange, along with every other exchange at the time, was a market for physically buying and selling stock. The NASDAQ was different than the other exchanges because it allowed investors to buy and sell stock on a network of computers. Today, the New York Stock Exchange is the biggest exchange in the world. However, as time passed and stocks became more widespread, markets popped up all over the globe. Notably, the biggest exchanges today are located in London, Tokyo, China, India, Canada, Germany, France, and South Korea. Stocks had a humble beginning as a representation of voyage ownership. Today, our global economy depends entirely on the stock market as a means of economic growth and enterprise ownership. It's crazy to see how the stock market has developed, and it's even crazier to think about where it may go in the future. We may see stock markets open 24/7 with near-instant blockchain transactions, smart contracts, and less brokerage fees. Really, I think the modern world is just beginning in the landscape of global business ownership, and I think it will continue to evolve as time goes on. That's about it for the video. I hope you guys enjoyed. If you have any questions at all, leave them in the comment section and I'll make sure to answer. Here's the comment of the day. Thanks so much for watching. I hope you guys enjoyed. Love you guys. I'll see you in the next video.